Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for March 3rd, 2024. Congratulations, you made it past the leap day of this year. Anyway, welcome to March. I hope you guys and gals have had a great trading couple of months. One of our users and members in the Forex Analytics community, made mention that we are already a sixth into the year, and the market is blowing and going. Yeah, we're near all-time highs, at all-time highs in most markets. And that blow off top that we talked about last week, it still looks possible. Still looks very possible. We're going to talk about that and more as we enter the March Madness month. When I say March Madness, we have so much happening this month, but just this week, it's a jobs report week. We have a lot of different data from the JOLTS, ADP, ISM services data, which everybody's going to be focused on the jobs component. We obviously have the weekly jobless report, the NFP, weekly jobless claims. We have Canadian jobs report the same day. We have the UK budget this week. We have the Bank of Canada, ECB, and we have Humphrey Hawkins testimony. They don't really call it the Humphrey Hawkins testimony. That was just coined after Alan Greenspan, I believe. Anyway, it's been Powell is testifying. Fed Chair Powell is testifying twice this week. So it's going to be a really busy week in the markets. And obviously, you got stocks at all-time highs. So I'm going to get into all that and more. But let me just say, if you haven't tried out Forex Analytics, do it. It's $1 for 10 days. You can jump in and be in literally one of the most busiest trading communities around. I'm just going to show you a real quick example. I mean, this is all of us talking throughout the course. This is Friday. Obviously, we're talking just in the general chat room. That was when I was basically saying, have a great weekend. There's been conversations going on just nonstop. We have, a news and research room where we post articles, sentiment, headlines, things that are important that might be moving the market. We have a trades room where you can actually see what positions I'm running. You can see what positions people are taking. There's like positions that, I have open positions. You can see them all right here. There's a lot going on. We even have an S&P room, a macroeconomics room, the flowonomics room. So there is all this and then side conversations on top of that, side threads inside of these chat rooms. So why don't you get to a community like us where you're with like-minded people, where we just talk markets and what's happening, and you don't have to worry about being trolled out on the internet, on the Twitter sphere or somewhere else. So anyway, we have a really solid chat room. You should visit it. And that's part of being part of the Forex Analytics, in the Forex Analytics system and community. You actually get to this platform with all these extra tools and all this analysis for all of these different instruments, but you also have a community, which is really the core and the backbone of what we do. So with that being said, I'm going to get into the charts and let's get into this week. So Monday night, and this is kicking off the week, and let me remove myself from here so you guys can see. Let's pull up specific charts. I'm going to pull up the dollar Swiss now. We have Swiss CPI. This is going to be huge data. Now, we saw a reversal in the dollar Swiss on Friday. But keep in mind, it wasn't so much a dollar Swiss reversal. It was just a dollar reversal in general. Yields broke down. I'll talk about that in a minute. But all in all, Swiss CPI is going to be really important. A cut could be in store for the Swiss National Bank if the CPI number comes in weaker than expected. So all eyes are going to be on the Swiss. Now, I'm showing you the dollar Swiss because you could probably say, oh, well, Blake, there's a double top. And I would agree that there's some pretty key resistance, but it's also at a 618 retracement. You can see this right here, how important these levels are. What's more important about the Swiss is not looking at the dollar Swiss per se, but looking at some of the other Swiss pairs. Let's take a look at the Euro Swiss. Most of you know, if you've been listening here for the last 3 weeks or so, I've been very bullish the Euro Swiss. I've been trading it to the long side. We still have long way to go to complete the inverted head and shoulder pattern. We just closed above the 200 DMA. And this has to do with Swiss weakness. Now, if we do see Swiss weakness following the CPI, yeah, the dollar Swiss could indeed challenge that 618 retracement or those recent highs. But more importantly, see how the Swiss franc is acting against other currencies. I am still long the Euro Swiss, and I have to say once again, it closed above the 200 DMA. I mean, the last time we closed above the 200 DMA and the Euro Swiss was way back over here, back in May of last year. So you can see we're trying to turn the tide after having a big long-term false breakdown at the end of last year. So real big moves brewing here. And remember, with Switzerland, you can have the one central bank that could really beat the European Central Bank to cutting rates, which we're going to talk about the ECB in just a few short minutes. So let's continue on. Monday night. So this is actually Tuesday morning in Japan, but we will have the Tokyo CPI. Now, I'm going to just pull up the dollar yen really quick, and I want to show you how vulnerable it looks. We are still in a bull flag pattern. Let's not, and by the way, we're on the charts that we use every week here on the week ahead video. So you guys know that, I draw them here and I leave the drawings for the week, except on the dollar index and, I think maybe gold, because I use those universally on the other live shows that we do throughout the course of the week. But we are still in a bull flag pattern. What I'm starting to fear here with the dollar yen is that there's a couple of things. Technically you can say, well, we're just, you can see how it's clearly making a lower high. I see that. A couple other big things though is you got the BOJ where Ueda is speaking actually Monday night or Tuesday morning in Japan, also speaking as well. But you got the Tokyo CPI, and you've got speculation that the BOJ may be actually starting to or getting close to raising rates. Now, I'm going to take you really quick over to the bond market, and I'm going to show you 10-year JGBs, or actually 2-year JGBs. If you were on the week ahead video, I'm sorry, I misspoke. If you were on the trade-off on Wednesday and you watched that show that I did with Chris Weston, one of the topics of conversation this last Wednesday was you have to watch the 2-year yield. The last time we were up at these levels, you can see how we're breaking out. The last time we were up at these levels was back in October when there was some speculation around the BOJ. But notice we're at levels that we haven't seen since 2011, 2012 now. So the reason why this is important is because if you're looking at the yen, there is now starting to be a risk that the market's anticipating the BOJ in reversing negative rates, coming out of negative rates. The 2-year yield is starting to expect that. That means that the market is starting to expect that. That means that the yen, going back to the chart I was just showing you, week ahead, right? Yep, week ahead. So the dollar yen might indeed be forming a lower high here. Now, what I'm going to be looking for in the dollar yen in the days ahead is this level right here. You can see this breakout point comes in at 149. So if you are taking notes and you're watching this video right now, you should probably write down dollar yen 149, really critical support. Every day with the Forex Analytics subscribers, let me go ahead and drop that down. We talk about the most important levels in the market, and the 149.60 level is really important earlier this week. But now that you're looking on a more of a weekly basis, you can see that this 149 level is going to be extremely critical. 149.60 was actually this level right here. But this level is becoming increasingly important. And since I don't necessarily talk to you except once a week, unless you are in the Forex Analytics community, then I'm just going to tell you, write down 149 because that level is going to be really important. Okay, that's Monday night. Also, what's happening on Monday night is we have China. They have their National People's Congress. Now, the reason why this is important is because they will talk about what their annual GDP estimates might be. Now, I know you know this more than likely, but China's economy is kind of in the dumps. And it's going to be really interesting to hear the National People's Congress if they, how's the terminology? You guys know it. Fake it till you make it, right? They will be like, yeah, we expect 5% GDP growth, where really, I don't know if that's doable. And I don't think the market believes it. However, it's going to be interesting to see what they come up with at the NPC. That will be Tuesday morning in China. Also in China, the CACSN Services PMI data. Now that's the private PMI data. Everybody's going to be watching that as well. Tuesday is going to be a really important day, and I'm going to take you back over to, from the dollar yen, I'm going to take you over to the dollar index. Now this is, the dollar index is one of the charts that I draw on, not just here. I do it with all the shows, all of our daily shows. So let's talk about the dollar index. And it's a little bit messy, so I'm going to clean it up a little bit while we're discussing this right now. So first and foremost, you can see how, and let's kind of zoom out here. You can see how the dollar really stalled at the 618 retracement. Now, I still believe we are in a, and let me get rid of this one too, real quick. Well, actually, you know what? We're going to get rid of this. I still believe we're in this inverted head and shoulder pattern. We're just now kind of working ourselves, into a consolidation. But the fact of the matter is a break back below 103.50 is going to be bearish. Now, if you were looking from this low, right? Or not that one. Let me grab this. All right, here you go. This low to this high right here, the 38% retracement comes in at 103.33. So really a break below 103.50 and really a break below 103.30, that's going to be very bearish. Now we do have, keep in mind, and the reason why I'm mentioning this is because we have the Services ISM on Tuesday. The headline number, that people are looking at is going to matter. Obviously, everybody's going to be looking at the ISM data and saying, okay, well, is the services data still well above, 50, and it's supposed to be at 52.9 or 53. Yeah, that's great. But more importantly, people are going to be watching the employment data inside of the ISM, and I think that's going to matter even more. So watch the dollar index, because really a break back below 103.50 is going to be bearish, or 103.30, and a break back above 104.20 is going to be bullish. So in other words, I'll just draw this out for you real quick on Tuesday, and I'm assuming real quick that you can see this is really the range that we're dealing with right here. So it's not surprising to me to see us right in the middle of the range, right here, right in the middle of the range, ahead of really critical data. Now, will the data be strong enough or weak enough to move us out of this range? I'm not sure, but I think if it's not the NFP on, if it's not the ISM on Tuesday, or the JOLTS data on Wednesday, or the unemployment claims on Thursday, or the ADP data on Wednesday, maybe it might be the NFP on Friday, right? So I think the culmination of this data, we will be threatening a breakout in the dollar index this week. Breakout or breakdown? I should clarify. Breakout or breakdown. All right, continuing on. Tuesday night, we have the Australian GDP. We should focus on the Aussie a little bit. That was, and we'll talk about this a little bit later, but the Aussie broke through that 65.50, and you can see we've just kind of been trading lower all week. But notice where we're rejecting, right? We're rejecting this, big pivot level. And remember, we're still in a head and shoulder pattern. So be watching the Aussie, especially that it's just not rallying with risk. And that's the biggest, and I know I say this all the time, but I want it to resonate with you. One of the biggest risks of the Aussie dollar right now is that it hasn't rallied as stocks are trading at all-time highs. It's divergent, grossly divergent to stocks. As stocks continue higher in the orange and the Aussie's not rallying, that is a big risk for the Aussie dollar. because that shouldn't be happening right now. Now, there's other things and obviously other factors that are playing into this, but a lot of it has to do with China. A lot of it has to do with monetary policy. A lot of it has to do with disinflationary pressures that's weighing on on Australia, where you see the economy in the U.S. continues to be strong, and Australia or every other economy is kind of lackluster at this moment. There's all that, of course. But just as a natural trade, you should see more of a bid in the Aussie dollar. And because we don't have it, that is, like I said, a bit of a risk. So the Aussie, keeping that in mind, Tuesday night, Wednesday morning in Australia, GDP data is coming out. On Wednesday, we're going to have the UK budget. And I believe, if I'm not mistaken, that budget will be delivered by Chancellor Jeremy Hunt. Is that correct? Okay, I'm going to do a little bit of drawing here because we've kind of given up on the cup and handle pattern. But what I haven't given up on, and if you listen to the daily shows, again, if you listen to the daily show, do you not know where to find the daily shows? Well, if you don't, let me just make sure you know. All you have to do is go to our website, see where it says webinars, just click on webinars. We have the Flow Show. It's free, right? This is the free Flow Show. It's when I'm sleeping, but it's during European hours. You have Ryan Littlestone, the host. He's joined by K-Man every day, prepping you for the trading day for free. Then you have the Morning Edge. That's a exclusive show for our traders in the Forex analytics community. But the Face Show, you can register right here. That's where we broadcast every day, and you're going to get my updated ideas from not just me, but from the rest of the team. And we're going to talk about like our best trade setups for the day. So make sure you're there on the Face Show. We kind of get you up to date on what's moving the markets. Then we have the daily roundup, and we have other shows. So just go over to our webinars page to get clued in there. I'm not really too sure why today our data flash right here is not working, but I'm assuming it's a weekend maintenance because it's the weekend. So we'll make sure it's working on Monday. All right. Going back into what's happening on Wednesday. So we have this UK budget that's going to be released. I think that we're building a rounded top in sterling, but what I'm really going to be looking for is a triangle breakout. One direction or the other, breakout or breakdown. Now, because I think it's more of a rounded top, I think the risks build for a breakdown versus a breakout. But, well, I mean, you have to let the market prove that. You can try to anticipate what you think is going to happen, but you do that in a situation like this. There's a 50% chance that you're going to be wrong. So just why don't you wait till we start breaking out or breaking down before jumping in. But I think sterling's going to be on the move this week. Also, we have ADP non-farm. We have the Bank of Canada rate decision. Now, we're not expecting any change from the BOC. But what the market's going to be looking for are clues to whether a rate cut is coming sooner rather than later. Now, I'm short Canadian currency because I happen to be long. For those of you that don't know, I happen to be long the EURUSD. All right, so I think we talked about this on obviously on this show a couple of weeks back. I'm still long the EURUSD. Actually, you can see this bull flag pattern is pretty much done, but I'm expecting much more than that, just so you all know. All right. Now, the EURUSD, again, I'm already short Canadian currency, but I think the dollar Canadian, you got to be watching it because during the BOC, if they really lead us down the road that cuts are coming sooner rather than later, the risk is that we're going to be pushing towards that 136.30 level, and that's a big long-term 618 retracement, big pivot in the market. I think this is going to be very critical. And we break above that, it's going to be extremely bullish. But I think this is going to be a very pivotal level for the dollar CAD as we go into this next week. So whether you're long or short, just think that that's going to be a real pivotal level for the market. Obviously, we have the FOMC, FOMC Powell. He's going to have the Humphrey Hawkins testimony on Wednesday and Thursday. So one of the things that we need to be looking at, is we have to be watching yields. Yields actually closed after we had this, what I thought was a double bottom and a breakout. Now, I know we closed lower on Friday, but let's see how we close on, Monday, Tuesday. Let's see, by the time the Humphrey Hawkins testimony or Wednesday comes around and Powell's speaking, let's watch the bond market, because if yields start to really break down, and this ends up being just, in my opinion, just ends up being some sort of like false breakout, right? Because then, people are going to start thinking, oh, shoot, here goes yields. Yields are going to come down. Then that means the dollar is really going to come under pressure. So watch yields as we go into this next week. I think they're going to be very, very critical. And, obviously the market's going to be hanging on every word that Powell speaks. All right, Thursday, we have Mexican inflation data. Now, I just need to say one of the things and one of the reasons why the dollar Mexican peso continues to trade really heavy is because stocks are at all-time highs. Stocks continue to move higher. So the dollar Mexican peso is naturally going to be trading heavy. We're coming up to some trend line support right here. That'll be around 1690. I think that's going to be really important. But that data on Thursday morning, it could seal the deal for a March cut. And so you might actually start getting traders thinking, oh, wait, are they going to, how aggressively will they cut depending on, on this inflation data? One of the things, and I don't know if you guys saw this over the weekend. I just saw or read some news. The Mexico City, which has 22 million people in that metropolitan area, it's one of the largest in the world. They are like literally 5 months away from running out of water. That whole city center. I don't know how much that's going to affect the economy as of yet. It's just something that we should be. Hopefully I just raised awareness for you. So for those of you that are trading the Mexican peso, just keep that in mind. All right. Thursday, ECB decision. So is we or ain't we? Obviously being cutesy here. Is the ECB going to hint towards an April cut? That's what this ECB meeting is going to be about. So let's talk technicals here with the euro. First of all, we are still in a head and shoulder pattern. Let me drop this down, this right here. Let's just drop it down there because I think that's going to be critical. You also see where that orangish yellow moving average, that's the 50 DMA. You can see how we're just hovering around the 200 DMA, right? So you see we're kind of trapped real close to these moving averages. Now, what that should really tell you, for me, is, and let me just, before I continue on here, let me just tell you, I would benefit from the euro going higher because I'm long euro crosses. And if you're in the Forex analytics community, you know exactly what euro crosses I'm trading. But the euro is at risk this week, especially if the ECB hints towards an April cut. You might actually see the euro come under some pressure here. Now, if the euro breaks through 109, it's going to be very bullish. So what I'm showing you here is a break below 108 will lead us back down to these lows. A break above 109 would probably squeeze the market pretty aggressively. So keep your eye on the euro, on Thursday. Now, we do have unemployment claims that day. Also, we have day 2 of Fed Chair Powell. It's going to be the same testimony, but obviously different questions. I believe that'll be from the House of Representatives. Don't quote me on that. I always forget which goes first. Anyway, that'll be on Thursday. Friday, obviously, what's going to be really important is going to be the jobs report. So I'm going to take us back over to the dollar really quick. Now, where the dollar's at going into the jobs report is going to be obviously very important. Will we be trading above or below, below 103 or above 104.20? I have a feeling that, heading into this data, there is a risk we're going to be probing either the upper end or the lower end of this range. And so the jobs data is a risk in in pushing us really out of this range. So average hourly earnings. Now this is where the risk comes in with the dollar, or excuse me, with the expectations. There is an expectation of U.S. unemployment, or excuse me, U.S. Average hourly earnings expected to drop really, really big this next week, right? So the market's expecting this huge drop. What happens if we don't get this huge drop? You've seen the disinflation here in the U.S. has dissipated, and inflation seems like it's stabilizing at a higher level. So everybody's going to be focused on these average hourly earnings going into this next week. Not just, did the U.S. create 200,000 jobs or 150,000 jobs or 250,000 jobs? Expectations are around 185, 190,000. But the headline number will matter. But what matters more is going to be the average hourly earnings. Then also, one last thing I should mention is we do have Canadian employment. Now, I want to show you real quick. I want to take you over to this chart, the Canadian yen. We drew this inverted cup and handle pattern obviously a long time ago. Now, the thing about these yen pairs is they kind of stalled. Obviously, you can see it in the dollar yen. And I'm going to just redraw this a little bit. Take this point here, connect these highs. So now, if you're looking, and let's just zoom in a little closer, because here, let me just show you. If you're in the Forex analytics community, you already know this is happening. You're coming out of a wedge, right? You're already well aware of this, but not all of you are in the Forex analytics community, so I'm going to clue you in now because I don't think it's too late. So here's the 4-hour chart, and I just showed you how we're up against resistance. Now, if you're looking at this ascending wedge, right? You can just draw it something like this. You see an ascending wedge. We're coming out of an ascending wedge in the Canadian yen. So watch the Canadian yen, especially with all the speculation around the BOJ, which, by the way, if people really start to think that the BOJ is getting closer to moving, off negative rates, and moving on rates, you'll see the yen strengthen, and then you can compound that with Canada, and you got employment. How about if the Canadian employment comes in worse than expected? I was just having this conversation on Trader Summit with Adam Button right here about the Canadian economy. And by the way, if you guys haven't been to tradersummit.net, there's new interviews and multiple new interviews every week. Plus, there's daily analysis down here that from a lot of different contributors. Yes, I do interviews. Yes, that's K-Man. Yes, that's Shy Girl. Yes, that's Jim Welsh. Yes, that's Michael Brown and Dick Matthews. I'm bringing in Mish on Monday. Schneider, she's going to be great. There's so many great interviews, so make sure you check out tradersummit.net. Anyway. The reason why I mention all this is because on Friday, keep your eye on the Canadian yen, because if that Canadian data starts to show signs of weakness, you have people like Adam Button that really is very, very bearish. He's the chief strategist at Forex Live. Most of you know that. Watch the Canadian yen. I mean, you start breaking below this 24% retracement right here, and that is going to open up some downside right through there. So be advised. All right. Now, I want to talk about other developments in the market, and that's pretty much what's happening for the week. It's going to be a jam-packed week. Hopefully you guys and gals are ready for hopefully some volatility. So what I would like to do with you is go through some of the markets that are moving, because some really big developments happen this week. But let me stop here and say, if you think that these videos are very beneficial to you, give me a thumbs up, give the team a thumbs up, make sure you subscribe to this channel. It's free to subscribe. We don't charge anything here at this YouTube channel, it's free. And hit the bell icon, because the bell icon will alert you to next time we have a new video, week ahead video that comes out. All right, so like I said, there's a lot that happened this week. A lot of big developments in the market. First one was gold. I personally did not think gold was going to close back above 2070. I've said it quite a bit. This is big resistance, but gold has broken higher. And it has a lot to do with what, the end of the week when you saw yields slump. As yields move lower, gold caught a massive bid. I didn't think this was going to happen, but there's a lot of things that happen in the market that I don't think is going to happen. That's kind of the market, right? It happens. Gold broke out, and I'm surprised. And I don't have any position in gold other than physical, but I don't have any other, like trading position in gold. But I'm surprised it has moved higher. I thought it would be moving back down towards 2000. But we've also talked a lot about on our daily shows how sticky it's been. Sticky meaning it hasn't gone down when the dollar has recovered this whole time. So that's something that, just keep an eye on gold because it did close above 2080. You know what else closed really strong this week? Crude oil. Now I want to do a little bit of analysis on crude really quick with you. Crude oil, it's I've been calling it the potential Achilles heel to central banks. The reason why is because crude oil, a break higher in crude oil is going to start to elevate inflation expectations. It's going to start to cost consumers more at the pump. And the reason why that's important is because it can constrict consumer spending on non-essential items like McDonald's. Just kidding. Not really, but really. That's the thing that if crude oil really starts to rally, you're going to see less spending on things, whether it's, travel, whether it's, travel and vacation, clothing, non-essential items. They're just going to start to go. There's not going to be a lot of money there if energy costs start to rise. When I met with Tracy this last week, Tracy Schuchart, she mentioned something that was really important to understand, that crude oil historically is a lot lower than where we're currently at. Historically, it trades around, $20 or $30 a barrel, 30 or 40 probably. But notice that we're just, we're making higher lows, and we're, back at 80. So if crude really starts to rally, which I think it points to 82.20 right here to complete this range extension, it might start to influence inflation expectations. So keep an eye on crude. I mentioned it a little bit earlier, but bonds, the 10-year is breaking down, so it's something that we need to note. So let's talk a little bit about equities. So equities, once again, this is our charts that we follow here. Once again, we're at channel resistance. But I'm going to say this once again, and you can kind of see it already developing. Notice how the lows are getting more shallow. That means the retracements are getting more shallow. The problem with this, and I know I explained it last week, but I'll explain it again. It's not giving people an opportunity to get long, to buy, and it's not giving shorts who think, every day they think the market's going down, today. No, it's going to be today. Today's going to be the day. No, today's going to be the day. Every time they short, they're not getting opportunities to cover shorts at good prices. So now we're starting to see this acceleration. I was talking to one of my friends yesterday who is a business owner and doesn't really, he kind of just trades, and I've known him for a couple of decades. He's just, trades around, and he's just a super busy guy, but, we talk on the phone quite a bit. And I'm like, you got to be, really careful here. He's like, I keep shorting the market. I keep losing money. I'm like, you got to be really careful here because of these, developments. It's not allowing the markets to pull back. And when you don't get the markets pulling back, you have everybody that's chasing. Once again, all of 2023, most macro analysts, if you listen to macro podcasts or you watch some YouTube videos that have some macro guru, there's a 97% chance those macro gurus were really bearish last year. So how do you think they advise their clients? They advise their clients, hey, pare back, be in cash, storm's coming, and it never came. So now everybody's kind of forced to chase the market higher. And that is a dangerous genetic makeup for the market, because we are at all-time highs, everybody's chasing, and this is why you've heard me say it, where we can actually accelerate into some sort of blow off top before we see a reversal. And that, I still think that is a risk, and you'll notice that these lows are just getting more and more shallow, which begs that we're probably going to be doing a topside breakout before a downside break. And that, I hope I'm wrong. I hope we can, reverse in this channel and kind of move back down again, like this. I hope this can happen. But every day that passes, it seems less and less likely. All right, now you can do similar analysis on, the NASDAQ and the Dow. Russell still is underperforming. As you can see, it's up against its range highs, but still, generally speaking, very much underperforming the rest of the markets. One thing that's been really strong, obviously, is Bitcoin. I'll bring up Bitcoin here. Now, this is OANDA feed. I need to use a feed that is that's a weekend feed. OANDA is not. So let's just use Binance here. So you can see Bitcoin is consolidating at the, let me just show you. Here's your weekly chart. This is your all-time high, right? This is to the 2022 lows, and we stopped at the 88% retracement. To me, Bitcoin looks like it's going to break out. This is one of those examples where you get a rally. Pullbacks are very shallow. So that means that the next move is probably higher, resurging higher. Again, not giving traders an opportunity for shorts to cover, not giving anybody the opportunity to get long. The only thing that's going to change that at this point in time is if you break back below 53,000. You break below 53,000, dynamics of this chart are going to change. So just keep that in mind if you are trading crypto. All right, this is the point where I'm going to talk about our setups from last week. So setups from last week. First setup was short Aussie below 65.40. We closed basically at 65. Let's go over to a daily chart, actually a 4-hour chart. So we were talking about a break below 65.40. It gets short. It obviously broke down. We traded to 64.90, and we're still below it. So I call that a win. Hopefully you guys did well with that. I know I've been trading the Aussie on the short side all of last week. Long Euro Canadian bull flag. Oh, I guess that was from last week. So I already did it. That was a win, obviously. I showed it to you earlier. I guess I do have it on here. There it is. So bull flag, it completed last week. Congratulations. Hopefully you guys and gals were on top of that one. Now, the last one was a setup. And I said long US dollar South African rand if it breaks above 1940. It has not broken 1940. Actually, last week we probed this 1930s and then we slumped. Now, I still think this is a great setup, guys. So even though it didn't trigger, so I'm not going to call it a win or a loss, it just didn't trigger, I still think it's a great setup. And hold on really quick. Don't go anywhere. Shit, I gotta go find. I don't think there's any like key South African data coming out this week, but just anyway, maybe it's the dollar that finally gets us that breakout that we're looking for in the dollar rand. All right, so setups for this week. So first setup for this week, sterling. I believe it's breaking. I believe it's breaking out. You got to play the breakout. I'm not smart enough or ballsy enough to trade sterling on a breakout. Okay. These the setups I'm going to give you are basically more setups versus buying or selling right now, because all of these are, I think, setting up. This is going to be a big week in the markets, guys. This is going to be setups versus like, just outright I'm going to be long or I'm going to be short. So sterling above triangle resistance is bullish, below support or this triangle support right here at 125.90. I think that's the level we wrote on Friday. Let me make sure. 125.90 or above 127.10. Those are your breakout points. We talk about it on Forex Analytics every day. So in the morning edge. So if you are not on the morning edge show, I've been hunting this one for a while. All right, the next one, Euro Sterling. I blogged about it this week. I am bullish. I am not long yet, but I am buying the Euro Sterling above oops, what am I doing? Wrong thing. I grabbed the wrong thing. That's what she said. Oh, I didn't just say that. I did. I'm sorry. That's offensive. Okay. So you can see right here a move above 85.80. And actually, if you look at 86 cents, because that's a 38% retracement of this move, it becomes very bullish. I'm not long yet, but I am looking to get long. A breakout above 85.80 is bullish. So that's another setup for this week. The third and final one will be looking to fade the Nikkei. Now, I'm going to do it via buying yen, but those of you that trade your prop traders, or you trade outside of the US, you might trade through some CFDs. I'd be looking at the Nikkei. Now, let's do a little work on the Nikkei really quick. Let's see, let's go to a weekly chart. Actually, let's do this. Let's go to a monthly chart. 6-month chart. There we go. That almost looks right. Yeah. Okay, you see it? Those are the highs back in 1990, the beginning of 1990. So basically, a break back below, I'm going to give you a number, 38900, 38,900. A break back below there would trigger, for me, yen longs. If you trade the Nikkei, it's going to trigger a false breakout and a reversal, but only below 38,900. So guys, gals, if you like this video, you think it's been beneficial to you, you think it's helping prepare you for the week ahead, then that means I've done my job. Give me a thumbs up, give the team a thumbs up, subscribe to the channel. Make sure you try out Forex Analytics. Jump in the chat room. You can be hanging out with myself or the rest of our team throughout the course of the week and during the trading day, because it's lonely at home trading, in your home office or in your office, or on your laptop in a coffee shop or wherever you're doing, or on your mobile phone. So be in a community where you can talk to other people about your ideas, and we can share our ideas, and then we can collaborate. So anyway, I hope you all have a great remainder of your weekend. I'll see you Monday morning on the Face Show. Get ready for a very busy week. Take care, and thank you for spending your time with me. I do appreciate it. Thank you. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.